All right, I'm with Terry Harbord of Talisker Resources, TSK, on the TSX. Terry, how are you today?
Very well, Robert. Thanks very much for having me on.
My pleasure. So Talisker is new to Goldfinger Capital. It's not new to me, though. I want to talk a little bit about the conception of the company, and then we'll get right up to speed with what's going on at the Bralorne project. So I recall Talisker came about some point at the end of 2018, and there was a focus on the Spences Bridge Gold Belt, which is not too far from Bralorne, but it's a bit south. So tell us about how the company was formed.
Yeah, so we really formed it as a spin out of a sister company, Sable Resources, and in Sable Resources we staked the remainder of the Spences Bridge Gold Belt. And it all sort of occurred just prior to Westhaven Ventures, now Westhaven Gold, making the discovery of their Shovel Nose deposit. And I think they've taken that a considerable way, now got a PEA out on that, considerable underground resource. But at the time, it was all considered as a frontier exploration play. And we were able to stake a large land package, I think about 200,000 hectares there. And our plan was to explore for that deposit type, low sulfidation epithermal vein systems, high grade bonanzas. So it was staked quite rapidly there on the current CEO of Sable's credit card, and then the decision was, Sable Resources has had some focus in Latin American jurisdictions. So to be able to utilize flow through here in Canada, we made the decision, well, let's move those Spences Bridge assets out. Let's put them in a new entity. So we basically founded listed Shell and then changed the name to Talisker and listed that in April of 2019.
Yeah, I have a little bit of a soft spot for the Spences Bridge Gold Belt, and it definitely caught my attention when Talisker started out. So tell us about the Spences Bridge. And I mean, it seems like the company's focus is clearly at Bralorne right now, but you still hold a lot of claims in the Spences Bridge. Is there anything happening there?
There isn't at the moment, and that's mainly driven by market conditions and available capital. We put a lot of work into Spences Bridge. We basically ran a major company style greenfields exploration program. We had 20 to 22 geologists in the field doing first order drainage sampling, minus AD mesh for anyone who knows about exploration, and we did that across the whole belt over 3 years. Followed up numerous projects with that, the anomalies with detailed mapping, some of those with soil programs over them. And to date, we've defined a series of drill projects there. And we're working through the process to permit those. Our Dora project, we have a drill permit on. The Nova and Cyclone vein cluster, it's about a 5-kilometre vein field. Pure grassroots discovery from following up the stream sediments, never been sampled, never been mapped, never been drilled. So it's pretty exciting to get that into drill phase. But really, we've taken a slow approach. The markets have been tough. We haven't had the capital to put into greenfields exploration. And as we saw with our Golden Hornet drilling and discovery, the market hasn't really cared about discoveries. We drilled 14 holes at Golden Hornet, all of them with all grade intercepts, great intercepts of sulfide, and nobody was interested. So it really helped us to focus what our priorities were at Talisker, and really park a lot of that greenfields and focus on the breadwinner, focus on the flagship of Bralorne.
Yeah, so let's talk about the Bralorne project, soon to be mine. I mean, I think we might be able to call it a mine
Sure.
now.
Yeah.
So, and then maybe we'll get back to Spences Bridge at, at the end of the conversation. So at Bralorne, you've been putting out pretty steady news flow as you make progress, ramping up mining operations there. One of Canada's next gold mines. That's pretty darn exciting. So how did you manage to acquire this prolific gold camp?
Well, interesting of Bralorne. Look, it's got a hell of a history here in BC. Still holds the spot as the biggest gold producer and certainly the highest grade gold producer in Western Canada. Was often considered to be mined out. No resource there or challenging. It had been with the Avino Group for quite a number of times, originally held by the former CEO, Lou Wolfen. His son is now CEO of the Avino Group. And Avino had been operating as a mining project, small scale, about 85 tonnes per day they were mining, from 2009 to about 2015-16. It was a critical juncture around that time after the Mount Polly tailings dam disaster. Every mine in British Columbia sort of got a magnifying glass over the top. Avino were given a stop work order and had to rectify a certain number of environmental matters. One being a lift on the tailings dam, which they had to invest about $30 million in, and another one was related to water treatment and implementing a new water treatment plant, which cost them an additional sort of $4 or $5 million. And really the way the markets were at the time coming into 2018, 2019 were incredibly different to how we are now. Avino are a silver miner, open pit silver miner in Mexico. Silver price was $15 an ounce. So they were doing it pretty tough, struggling to be cash flow positive. They had a debt call coming up, which would have been challenging them to be able to invest. They'd raised a significant amount of flow through cash, I think about $8.5 million, and were putting that into exploration, basically looking for a new Bralorne. And unfortunately for them, the exploration wasn't going particularly well. They were off the trend. So drilling a lot and not really hitting much. So it was a pretty tough time for them and pretty tough time in the markets for them as a producer. So we sort of came along just at the right time. David, the new CEO, was aware of our team's technical work on various other similar projects in Canada. We provided a solution to help them deal with their debt call coming up. We offered them a shareholding in the company, 9.9%. And I think they still hold almost all of their shares. And we also brought a strong technical team to take the project forward. So we were very fortunate to be in the right place at the right time to be able to acquire that asset from Avino and then allow them to continue their focus in Mexico, which has been very successful for them.
So it's interesting that you said that there was a perception among the market that Bralorne was mined out. And I mean, I guess that the core of the ore body, the center of the deposit was mined out to some extent, but there was a lot left at King and Mustang and Pioneer, and even some areas of the core deposit area were still left, intact and weren't fully exploited. So, what I see with Talisker today is I see you have 1.7 million ounces with a pretty high confidence, level, high grade ounces. You're ramping up to be an operating mining operation as we speak. So tell us about how you transition to getting to some real scale. So like from today, how you get to 100,000 ounces.
Right. So we we're basically taking a pretty staged approach here to our ramp up. As a company, in a way, we're a little conservative with how we do things, and the main reason for that is that there's a colossal number of failures here in undercapitalized juniors, in projects that aren't well understood. So we've always taken a lot of time to be able to understand our ore bodies and being able to stay within our means. And really, Robert, we've been driven by that because of market conditions. The market's been very tough here for the last 2.5 years for us junior miners, and also for junior investors.
I noticed in the planning that you're going to ramp up the Bralorne mine gradually. And I know investors always want to have more information and more details and when are you going to hit this milestone. So what can you tell us about the approach that Talisker has to the ramp up?
Okay, so we're really taking a steady state pathway coming in and making sure we understand the mining and the conditions of mining as we're going forward. So we're currently on development or lateral development of various bases. So four development fronts so far, and developing a fifth one. And these 5 fronts really gives us lots of working fronts and lots of flexibility in our production plan. We're starting here at about 100 tonnes per day, and we'll look to double that to about 200 tonnes per day in the second half of this year, moving to 250, 300 next year, on to 500, and then 750 tonnes per day. Now, all of this development pathway is built through our cash flow. So we're taking a bit of a longer path and a bit of slower path, but it's a path that we can run quite systematically on the capital that we've got coming in. And really, a lot of that was driven basically by access to the capital we could and staying within our means in our production profile.
The 100,000 ounce mark is very alluring because the prospect of Talisker achieving 100,000 ounces of annual gold output would definitely bring it into a new valuation class, much higher than it currently sits today. What can you tell us about where you expect or where you'd like the company to be at the end of this year in terms of run rate? Is there anything you could tell us on the cost side? Like, what are your forecasts for the all-in cost per ounce, et cetera, et cetera?
Yeah, so we're really kicking off here at our Mustang area, or our Mustang mine. The reason we're starting here at Mustang is because there was already a lot of existing infrastructure. So we're able to start mining very quickly. It's only about a 2-month time frame here of development for us to be in our production stopes and moving that out. So it means we didn't have to seek a lot of external capital to be able to do that development. We're looking at a remote processing scenario. Fortunately, where we're located in South Central BC, we've got highway access to half a dozen of the biggest mines in Western Canada, many of which have hungry mills. Their first year, we're looking at trucking to the Nicola facility, was BC's first toll mill. So all things that reduce our capital requirement to get things started up. We're not rushing into high volumes of production. We've seen some classical failures of people having hungry mills to feed and not being able to keep up with the development. So we're taking another approach where we're taking a steady approach coming into that timeline. Our expectation here, a 5-year mine plan, we're looking at about a $1,500 Canadian all-in sustaining cost. Our first year is a bit higher because our mining rate's a bit lower. We've got a bit more development, so we're looking at probably 1,800 Canadian. So with these fantastic gold price, I think we're well over 4,000, 4,200 Canadian. So it really jettisons us into a high margin scenario in this critical startup period of the company.
Tell us about the news release you put out on February 26th about the sorting the ore with the laser concentration technology and how that increases the feed grade from like 14 grams per ton to almost 28 grams per ton. And why is that so important?
Yeah, look, it's super interesting technology there, Robert, and really starting to become commonplace throughout mining projects to help with economics, help with efficiency. The laser sensor, it's a crystallinity separator, and it specifically works very well with silica or quartz. And we've got high silica veins, so it's able to remove about 35 to up to 55%. So nearly half of our material can get removed out of our ore blocks. So the impact on that, first, is it increases the grade. In our testing, our average head grade was about 14 grams, and it nearly doubled that up to 27.7 with very good recoveries, 95 to 99% recoveries. So it has some really direct impacts on our economics. It can reduce from 30 to 50% the amount of material that we have to truck, the amount of material we'll have to mill, but it also has some indirect impacts. It allows us to reduce our cutoff grade. It allows veins that are narrower, that might have been diluted by mining width to below cutoff, to now be able to come into our resource base. It allows us to look at better mining efficiency by mining at wider widths, because our lateral development now can all become ore, because we can separate the waste that would generally dilute that out. And has some great longer term benefits as well. When we're looking at right sizing and implementing our own mill, we might have to put in a mill that's a third or even 50% smaller than if we were processing all our material, and of course reduces our energy costs to turn that mill. So this great new technology has some really broad impacts, not just right at the coalface, if you like, of milling and trucking, but also great efficiencies in the mining process and long-term in the milling process.
You know, it's been impressive to watch Talisker transform from a small, explorer to now a real mining company. I mean, you're basically on the brink of being a real mining company, and also with a very large footprint. So the property footprint you have there in BC is extensive. Obviously, you're the largest claims holder in the Spences Bridge Gold Belt. So, I know you're very clear you want to walk first before you try to walk and chew gum at the same time. You're in the learning to walk phase right now there at Bralorne, and we'll continue to stay apprised of the company's progress over the coming months. But let's go bigger picture vision here, Terry. Let's look out 5 years. If all goes well at Bralorne, the cost per ounce that you cited is exceptional. That's a very good cost for a small miner, quite frankly. Very profitable at today's gold price. What's the bigger picture vision? How do you advance this company even further and use your property footprint at Bralorne for more exploration, new discoveries potentially, and also the Spences Bridge area as well?
Well, our pathway here at Bralorne, I think, is relatively straightforward. We have a pathway here to get to 100,000 ounce production, and that's just out of one portal, so one port of egress. So we're working now, having a look at a lot of the historic data that we have around Bralorne itself. So a lot of exploration development was done in the 1960s. I think about 24,000 drift samples directly along veins, mapping along these veins, all data that we didn't have time to bring into our initial resource. So we're currently working on that data. We see potential here for anywhere between an additional 1.3 to 1.5 million ounces that's supported by all this historic drift data, historic mapping. So that's the initial phase that we'd look at. And that would then feed into planning and evaluation of, can we put in an additional portal or even a couple of additional portals in the other area of the resource, in the gap between Bralorne and Pioneer, and effectively look to double our production up to and beyond 200,000 ounces. So it's something that we're working on right now. Of course, outside of Bralorne, there's a lot of potential as well along the whole trend. One of the first things we did was to consolidate the entire district. So we've got a 33-kilometre trend there. There's about just under 50 historic vein mines along that trend. Many of them never had modern exploration done. Some of them even have resource on them. Historic Resource Congress has got about 186,000 ounces at 9 grams. Was only drilled to 200 meters from surface. And we know that these orogenic style or mesothermal veins at Bralorne go to 2 kilometers and beyond. So a lot of direct upside. The BRX project, we drilled some holes in that and we got 11-ounce intercept on our first hole. So a lot of immediate upsize in the immediate area of brownfields of Bralorne and then along that entire belt. So ultimately what we'd like to develop is our own hub and spoke milling scenario. So inverting what we're doing now. Now we're trucking because we don't want to build a mill, because we don't want to get all this capex. But once we're up in production, making good cash flow, we look to bring in our own mill and then look to develop satellite deposits that we can truck our own ore to our own plant to, and really build a mining district there, which we believe Bralorne can be. In the background, we've also got all of our secondary projects. And the first one of these, of course, is the Ladner Gold Project. Just under 700,000 ounces resource there. A very interesting tailings project, about 45,000 ounces, we believe, in the tailings. It's at a high grade, 1.64 grams per tonne, and some work done by University of British Columbia has shown recoveries of up to mid-80s. So that could be a fast-track project to bring into production while we look to expand that resource. That's located down near Hope in BC. Our Golden Hornet project, of course, which we drilled, we'd like to go back and continue working there. Can we define a mineralized footprint? Can we define resource there? And then start to attack our projects here in Spences Bridge. And really the top one of that is the Nova-Cyclone cluster. It was discovered as 2 independent areas, but mapping that we've done has really shown a 5-kilometre vein field. Grassroots discovery, Robert, never been drilled, never been sampled. The type of veins they are very high in the profile of the gold. So we need to drill down to a bonanza zone. But what we see there in the country rock, in the wall rock, is a lot of brecciation, a lot of sulfide with gold mineralization. So we're hopeful there that we might have a 2-tier system, a lower grade discovery at surface and a high grade bonanza style vein discovery deep down. So a lot of things coming in the pipeline. The first and main focus of this, of course, is Bralorne. But once we're at a point where we've got a good volume of cash flow, we can start to look at these other projects. And if everything works out well, build ourselves into a multi-asset producer.
Very nice. Very well said. It's like you have this big menu that you can order from whenever you're ready to have it. And right now, obviously, the focus is generating cash flow and getting a big mining operation fully ramped up, and obviously that's a great priority to have with gold above $3,100. I'm intrigued by what you said about Nova-Cyclone, because I love exploration, Terry, and I know you do too. So it's never been drilled. It's a grassroots target that you guys have worked up over the last 5 years. Why has it never been drilled?
Nobody just never explored there, Robert. I can't answer anything else. There's no assessment reports. Apparently one of the farmers there, the landholder, said that a geologist had come through there looking for copper, but nobody had ever looked for gold. There's no assessment reporting. There was no channel cuts and veins literally sticking out of the ground that you can trace for hundreds of meters. So a really quite surprising thing in in the interior of BC, where a lot of people live, to not have been explored was really quite astounding for us, that there was no recorded work, recorded sampling, no assessment reports, nothing. Quite amazing that in Canada those opportunities still exist.
So I assume that you're still under the strong impression that the Fraser River Gold Rush, the gold that was found there in the river and streams there in BC, there's still an undiscovered hard rock source or sources that's still lurking out there, and there's a good chance that at least one of those is on Talisker's property.
Oh, absolutely, and particularly with the way these types of deposits are low sulfidation epithermals, the gold only gets deposited in what's called the boiling zone or the bonanza zone. And often at surface, if you sample the veins, there is no gold because it's often in the vapor phase. It's cooler temperature silica, so chalcedonic or even opaline silica at higher levels. And the gold doesn't get deposited there. So even if somebody come and sample them but doesn't understand that epithermal model, then they'd likely walk away from those veins. So the key thing is that certainly the Nova-Cyclone wouldn't have been a source for the Fraser River Gold Rushes because it's not at that erosional level. The gold deposit's still well below where the current surface topography is. So a great opportunity to make a significant discovery there with hopefully a very sizable footprint.
So Nova-Cyclone, I mean, so that's blue sky for Talisker and Talisker shareholders at some point in the future. I mean, if you had your choice, if you could, perfect setup and cash in the treasury is not an issue, when would you like to see that drilled?
Well, at 3,100 gold, I'd drill it tomorrow.
All right, so maybe that's something that we'll hear more about over the coming months. Obviously, that's a very interesting target, and I do have a soft spot for the Spences Bridge Gold Belt. Just a couple more questions, Terry, and then we'll wrap up for this first interview. What keeps you up at night? I mean, obviously, gold mining is not an easy task. What keeps you up at night?
Well, all of the classical challenges with junior mining. We're fortunate in a lot of ways, Robert, because the deposit plays ball very well with us. We're not concerned about continuity of the structures. We're not concerned about mining along the structures and then they just vanish. We understand the geochemistry of the gold and the distribution of the gold very well. So we know we're not going to mine veins and not have resource there. I'm very confident with the skill level, knowledge, and experience of Leonardo de Souza, who's managing our resource development. He's a 40-year veteran of resource work, working with major companies, Anglo American, Anglo Gold. So I think that risk is mitigated there. Mining rate's always a challenge, keeping up with that mining rate. We're sort of mitigating that in these early stages because we're not out ahead of ourselves. We're not trying to mine thousands of tons and feed a hungry mill that we've already commissioned. We can stage it in. So I think we can understand that well. Rock stability is always something that we're concerned about. We've had some very good rock mechanics studies and controls, but really we have to see when we start to drill and blast, analyze the overbreak, analyze dilution. There are always things as narrow vein miners that we're battling out. Again, we're fortunate because we've got very strong rock, a lot of silicification in that. So certainly early indications with our development in vein here have shown that we can control that very well, but it's always something that'll keep me up on a day-to-day basis. Are we keeping on top of it? Are we keeping our production rate up and our dilution rate low down? uncertainty in the gold market. It looks like we've built good support levels here on the 2,700 mark, and hopefully we'll have a several year term here where things are held at this sustainable level. But the reality is we did do our original economics at 1885, so gold could go back to there. You know, we know the project works. It's very high grade, high margin, but I'd much rather be selling my gold at 31 than at 1800. So there are always challenges. We've had a lot of turmoil here of late, both in the market and, of course, relative to tariffs. So one thing that we're certainly focused on now is continuity of supply of our materials and our consumables. The path's not very clear with tariffs and what's going to be on tariffs, what's going to be not. It seems to be changing on a daily basis. And I know it's not just us miners that have to deal with it. It's across the board here in Canada. Where is the stuff going to come from? Is it going to increase in price by 25%? So we need to be able to mitigate and manage all of those changes right now and see what the impacts are on those economics, because we often see all-in sustaining costs tracking upwards. We see gold prices going up and then the all-in sustaining cost follows it up. Fortunately for us, we're high grade, we're high margin, so we can absorb increased costs. But yeah, they are things that I worry about as a junior miner, and I think senior miners worry about them as well. We all have to find ways to mitigate from those challenges that we have going into production.
Yeah, so you said the all-in sustaining cost here in 2025 is going to be around 1,800 CAD, and today the gold price in Canada is close to $4,500. So that is a very nice margin there, you know, at today's gold price. And your concerns about the tariffs are definitely well founded. There's a lot of uncertainty there. Everybody's talking about that uncertainty, but it is interesting to note that just the last couple of weeks, when we've been in this turmoil, price of oil has declined, natural gas prices have declined, and it seems like the labor market has balanced out quite a bit in the last couple of years from a period where there was a shortage of labor and labor costs were rising at an aggressive pace. So it seems like from the cost front, the situation has become more favorable for gold mining companies. Obviously, the future is still uncertain, but it's almost like this is a perfect setup here. And I don't want to jinx it by saying that, but just based upon the data I have today in front of me, the gold price and the trend in company cost structure, it seems to be favorable for higher margins. So that's very interesting. So I guess final question, Terry, when will Talisker be generating cash flow? How do you plan to report that cash flow to investors? And are you contemplating any, so it's like a three-part question. Are you contemplating anything, or can you even hedge some of your gold right now with these high prices?
So we're looking at trucking our first ore sort of in May, June this year, and then sort of end of Q2, early Q3, we'll be looking at receiving some cash flow from that, and then it'll be quite consistent. We'll be trucking a set number of tons every day and milling a set number, so it'll be quite consistent from then on. At this stage, the products we'll be producing out the other end, we won't be producing a doré product, so there's not a lot of scope there to be able to hedge that production. We'll be producing a gravity concentrate, so a high value gravity concentrate that mostly be gold and silver, and then we'll have a sulfide concentrate at the other end. So at this stage, with our current milling arrangement, where we won't be hedging, but that'll be something that we'll certainly consider in the future. A percentage of our production, I think it's always quite prudent to have a look at locking some of that in. You know, we are seeing what most of us believe is all-time high gold. Some of the super bugs think it might go to 5,000. I'm a bit more skeptical at that, so I think it's probably good to be able to lock in some capital just in case it does retrace, and it might just retrace back to 28. But if we've locked in at 30 or 31, then it's a good position.
Yeah, I think it's a prudent move to hedge some. I mean, obviously, keep yourself exposed to further upside, but be prudent and hedge a portion of the gold there at Bralorne. I think it's a prudent move. Terry, thank you so much for your time. This is a great introduction to the Talisker story, and I look forward to more conversations in the future.
Robert, thanks very much. Always a pleasure.
Cheers.